Hello, this is Cynthia Fick, and this is the December 2nd stock market update. Hope you all had a great Thanksgiving. So now we're barreling into December. We already had our second day, and the market is up nicely. The AI stocks that have been beaten down are coming roaring back, and are the cryptocurrencies that had also been kind of beaten down. They're coming back too. So could that continue? It might. Looking at what is historically a great time for the stock market, the month of December is considered to be a really good month for the market. On top of 87% of economists out there think that they're probably going to lower interest rates in December. That changed a lot in the last couple of weeks. Inflation numbers are coming out a lot tamer. We seem to know more about what's going on with tariffs or not as fearful of them right now. Also, this is a time when the Federal Reserve, they've been doing quantitative tightening, believe it or not, for the last 5 years. They've been lowering interest rates most recently, but they've been tightening on their balance sheet. And so that just ended yesterday. So that could have some effects on interest rates and long-term interest rates too. So there's a lot of kind of tailwind behind us for closing out the year potentially on a higher note. Let me show you the chart of the market. This is the S&P 500, and just looking at where we've come so far. So this is, we did, just don't forget, we experienced a almost 20% correction in the S&P 500 in the February through April timeframe. The market came roaring back. That was a 38% increase from the low to the high. And then we did what could be expected and had just a normal pullback. This was about 6% or so in the S&P 500, and we've come rebounding from there. Now, again, a lot of the stocks that had, gotten hit a little harder were the artificial intelligence stocks. There was again concern that there was a bubble, and I kind of talked to you about every time over the last, since the 1980s, there's been talk of a bubble and how it usually comes a lot sooner than the actual bubble. Also, just wanted to kind of talk more about artificial intelligence and just kind of put that into perspective also. There's a lot of naysayers right now. Companies are spending way too much money, CapEx, capital expenditures out there on preparing for artificial intelligence. And I just want to put that in perspective. Not many of you are around. I don't think any of you were around when this happened, but remember the railways when they first came out, a lot of naysayers were out there saying, oh, that'll never work. There'll be a bunch of disconnected lines that never get you anywhere. So that was, the initial thought on railways. And then we had electricity. That was definitely in doubt when it first came along too. Telephones were a frivolous contraption, and telegraphs would just be completely sufficient. There was no need to have a telephone way back when. And the internet, even in the late, uh, you know, 90s, they were saying, it's probably going to end up being no more useful than a fax machine. So those are kind of the naysayers that go on when you first have something. This could be an industrial revolution 2.0. So that's my thoughts today, and hope you have a good week, and we'll be talking to you next week. Bye.